everybody, and welcome to Ticker Talk for Wednesday, January 11th. Let's dig right into this. I think we got a lot of cool stuff today. So everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. I think everybody knows who I am. If you're watching the recording, go ahead and smash that like button. All right, so first thing we're going to do, as always, we'll take a look at the markets, the major indices, some of the little indicators in there that we like to look at, like VIX and the dollar. We'll look at some sectors really quick, and then we'll just dig right into your tickers that you guys wanted to look at. So without any further ado, let's make this happen. All right, so here is a chart of SPY, the S&P 500. You can see that we are firmly in a downtrend, although we seem to be, making a bit of a bottoming pattern here. And, you could make the argument that there is a big head and shoulders bottom going on, maybe. If we get a little more, dig into the more recent price action, though, you can see that every time we have hit this downtrend line, we have pulled back. And the last time, we pulled back, and we didn't pull back much, and we went right back up to it. And I thought, oh, we're really going to break through it this time. And of course, that didn't last long. We broke through it for about 2 minutes, it looks like. And then we came back down. We really, again, didn't come down much. We did break through some major support there, but we didn't go much further. And we put in a really nice basing pattern since then. So this basing pattern is basically over the holidays, right? And I guess into the new year a little bit. This week, we started off Monday with, this is Friday. This big green candle is Friday. That's right. And we started off Monday. We went up nicely. And then we started pulling back later in the day. I think that little pullback there happened a day early as far as I'm concerned, because I guess, the market was afraid of what Powell was going to say. And that really kind of surprised me. I thought, I guess anytime the market does something that isn't really logical, because I think the market's pretty smart usually. But this time around, it's like all you had to do was look and see what this event was and know that it wasn't going to say anything that affected the market. And then this little the panel discussion he was in had nothing to do with the market. It was about the autonomy and the mandate of central banks around the world. So anyway, this little pullback I think was completely pointless. And then so yesterday, after he spoke yesterday, we instantly started going up and went up through the day. That was great. And then today we gapped up. Actually, let's draw that gap in there. We gapped up nicely today, and we kept on going. So you can see that we closed today on the highs, which is always really nice to see. Let's get tighten that up a little. You know what? Let's zoom in a bit here. Let me draw this properly. All right, there we go. You can see that we closed on the highs today. We've just poked our head into this gap here. From the downturn, from hitting that trend line the last time. And we look prepared to go up and test the top of the gap, attack this 200-day moving average again, and maybe go attack this trend line, this downtrend line again. But as you probably know, tomorrow morning before the market opens, we have the CPI report. So everything kind of hinges on that, and everything we're going to talk about today kind of hinges on that CPI report, doesn't it? I mean, if the report comes in hot, if inflation is hotter than expected, we're going down, and we're going down and probably testing the bottom of this range. If inflation comes in lighter than expected, then we should continue to rally here and make our way up to at least up to this trend line. And, if the market seems to be in a better mood, the setups seem to be working a little better, breakouts seem to be working a little better. So I think that if we can continue to rally here, we have a really good chance of breaking through this trend line and then maybe even going and attacking this resistance overhead here. So that's the S&P 500. This has been stronger than, say, the NASDAQ. The NASDAQ has been pulled down by a lot of the large cap tech, but you can see the same sort of pattern here, except that this came down and has now really made a triple, or this is a potential triple or quadruple bottom here. This is a really nice looking bottoming pattern if we can get away and move away from this. And again, you can see that we've come right into some resistance. In this case, it's the 50-day moving average and this little resistance line here. I guess this gap has now been closed. We can delete that out of there. But we still do have a gap overhead. And of course, we've got the downtrend line a little farther overhead. IWM, this has been stronger than the NASDAQ as well. You can see that, we've definitely made this higher low here. We've broken through the trend, the downtrend line today. Now you could draw this a little differently and then we wouldn't have broken through it, but I mean, this is pretty hopeful here. We are definitely through the 200-day moving average. So, it really looks like we're going to go make another try at a higher high. In this case, we'll have to get through this double top right here, which is now a major resistance line up in around 188. But again, I think that with a CPI report that the market is happy about, I think we can continue much higher than this. Okay, let's take a look at volatility index. So volatility index is interesting today, but not surprising. So you can see yesterday we came down quite a bit. We broke out the bottom of this this pennant or triangle that's forming here, and today we went up a little bit. And the normal relationship for the volatility index is it moves opposite to the market. So if the market's going up like it did today, and especially when it's going up quite nicely like it did today, up around 1.5% on average, you don't expect to see volatility going up a little bit. However, with the CPI number coming tomorrow, it's not a surprise that we went up a little bit. This doesn't concern me at all that we went up a little bit today. Looking at the 10-year yield, not much change from the weekend, really, just kind of still consolidating here, drawing a bear flag. If we look at the dollar index, you can see that is drawing a bit of a bear flag here, but right above this uptrend line. All right, let's move on to take a look at some of the metals really quickly. Here we're looking at gold. Remember I mentioned these precious metals on the weekend, and well, I mean, we talk about these quite often, but we are now drawing a nice little bull flag here up at resistance, or minor resistance level here. I would not be at all surprised. In fact, I would be surprised if this doesn't break out the top side of this. Again, depending on what CPI does. The miners are doing well as well. They're also drawing a bull flag. Silver, not quite as strong as gold. Kind of consolidating here, a little bit of a messy consolidation. It'd be nice to see this break out and get back above this trend line and break out to the upside. Copper has done really well. We highlighted this on the weekend because it looked like it was starting to break out. Sure enough, it is. This is a nice strong move for copper. There are some ETFs. COPX is an ETF you could use to play this if you want to play copper directly, or the big copper miner is Freeport-McMoRan, FCX. Let's take a look at our commodities index, and we can see that that is now moving back up after coming down and testing this minor support level, but we're now right at a major resistance level. Why we got this gap in here? So clean that up a little bit. Yeah, it'd be nice to see this get back above this level and start moving up. To do that, of course, crude oil needs to be going up. Now, this has been drawing a bear flag, but today it looks like it tried to break out the top of that. It's still got a lot of work to do to discount this bear flag, or for us to say the bear flag is broken. Another update like we had today would certainly mean the bear flag is broken. But it does look like it wants to go higher. I can see that it is a little bit higher in the after hours. Natural gas, the downward momentum seems to have stopped finally. at a major resistance or a major support level. So it'll be interesting to see if this can turn up. XLE, our energy sector ETF, still hanging around up near all-time highs. We've got a little bit of consolidation right here, right around a minor resistance level. That's nice to see it consolidate like that. It's setting up for another leg higher. Now, does that leg higher, move beyond this all-time high? Let's get to this all-time high first and see what happens. Let's see, oil services ETF. This thing is a monster. This is doing really well. It tried to get to all-time high today. Didn't quite get there, but it really looks like it wants to break out to new all-time highs. So that's oil services. Let's see, TAN was looking really bad, and it's decided to try and make a comeback here. There's been a really good few days here. We started off on Friday, and then Monday broke out of this consolidation. So this is why they say from failed moves comes fast moves, right? This was basically a bear flag. It broke out the bottom of the bear flag and then got right back into it the next day and started moving to the upside. A couple of the names that we watch here. First Solar has or did break out to a new all-time high today, but then kind of pulled back in, right? That's not very bullish when we see it do that. But we've seen a lot of this, in the last year, and quite often, it will make another try at this. This is a pretty strong move up into here. Let's sort of bring that across. That was a pretty strong move into there, so it expended a lot of energy to get there. It's fine if it consolidates a little bit. Another solar that's done really well is CSIQ. Look at this monster move. And, it's continuing. A little bit of a pullback, today, really minor pullback. Wouldn't worry about that so much. This looks like it continue higher and go test its all-time highs. Now, the laggard here is ENPH. We're going to look at this one in a little more detail a little bit, but you can see it is not performing anywhere near as well as its peers. Let's quickly take a look at consumer discretionary, which has really made a nice turn up. Nice U bottom formed here, and looking like it wants to go higher. Industrials still doing quite well. After the little pullback, broke out a little bit. Now finding a little bit of resistance, but I think these are going to move higher. Financials are looking good as well. Same sort of thing, a little bit of a cup forming here, but looking like this wants to go higher. Let's look at technology. Technology right into a downtrend line. The 50-day moving average, the 100-day moving average is right there. Looks like it's wanted to go higher. Closed on the highs today, right? Of course, this all depends on CPI tomorrow. I could see this though in a day or two moving right up into the 200-day moving average, or this gap here, or this former gap, and which is now going to be a little bit of a resistance. Communications sector. Looking good. Nice move out of this consolidation. Nice move off the bottom. Looks like it could easily continue higher, but there is a fair bit of resistance overhead in this one. If you guys want to see any of the FANG stocks, just let me know in the chat. Even semis are doing well. Semis have made a little bit of a recovery here. A little bit of consolidation going on, but they look like they want to go higher. Healthcare, though, kind of iffy on healthcare. Have had a couple of good days here, but it's looking weak, looking like it could quite easily find some sellers. Biotech is moving out to the top of its range again. Kind of a bit of a hammer candle here, or a dragonfly doji there. This looks like it might want to break out though, so it's just been, when this breaks out of this range finally, I think it's going to be a really big move. What else? Read staples. We don't need to look at any of the defensive stuff. Okay, so I want to get into, so we've got some tickers to look at. for some people in the Discord. First one we want to look at is ENPH. I mentioned we were going to talk about this. And brownies, if you're watching, go back a few minutes and look at what I had to say about TAN and some of the other solar stocks. I'll just quickly blast back to CSIQ to give you an idea of what I'm talking about. But look how strong this has been. You know, look at this move from 30 up to 43 in just over a week. All right, that's some serious strength there. What has ENPH done in that week? It's come down a bunch and it's had a little tiny bounce today. So a lot of the solar stocks are doing really well. ENPH is definitely underperforming compared to those. And I think that really today is just a little catch up, a little bit of a sympathy play on some of the others. But obviously something's going on here with ENPH. I don't know what's going on with the fundamentals, but the chart is telling us something's wrong. So maybe it bounces here and continues this way up, but I don't know. I think there are better places to be right now. You know, something is sketchy here. If you know why it pulled back so hard and didn't bounce strongly like the others, and if you think that bad news is now behind us, then yeah, maybe there's something here. But I wouldn't be surprised to see a bit of a dead cat bounce in this to roll over and continue lower eventually. Let's see. That was ENPH for brownies. Let's take a look at, okay, the next couple here are for Jerry. He wanted to look at URA. This is the uranium ETF. You know, this has been a bit of an underperformer too. Everybody thought this was going to be going to the moon, and it never really happened. We haven't looked at this in a while though. Let's get some trend lines on here. So he mentioned seeing a great big wedge forming, and I'm not sure that I'm on the same page with that. I think maybe this is what you were seeing, but it's, you know, it's really just a downward channel, right? I mean, I guess we could draw this here, and it does kind of become a bit of a wedge. But I don't think that I just don't think that's the important structure here that we really need to be paying attention to. I think that you know, we definitely should be looking at this downtrend or these downtrends here, and you could say maybe the first of these is broken, you know, and we've broken out of that. We could even draw an uptrend on this here, and think we should, right? And then that gives us, and I'm going to get rid of that one just to clean things up a little bit, and this one. So I think this is a better way to look at this. You know, with a nice, pretty much symmetrical triangle or a pennant here, and we seem to be breaking out the top of it, but we're not doing it with very much volume. Volume's kind of light here. It's not a very convincing breakout. We should probably have a horizontal resistance line in here as well. Yeah, somewhere in around here. Okay. So yeah, so long story short, I am finding this little breakout here to be unconvincing. I think there's going to be a lot of overhead in this because I know a lot of people were playing this, you know, expecting it to go up a lot. And there may be a lot of people trapped up in here. It's done quite a bit of volume up in that area, so it may have a tough go getting through that. Let's look at maybe some of the companies and see what they look like. Yeah, big sideways consolidation. You know, I mean, when it comes out of this range, these companies could do better. Let's look at Cameco. Yeah, same sort of thing. You know, it's had a good couple of days, but is it running out of steam already? Kind of hard to say here. We're still very much in the consolidation, and really, we're right in the middle of the consolidation, right? So, yeah, tough call on these uranium stocks, I think. Right. else have we got? Okay, also for Jerry, you wanted to look at HIMS, another one that's in a consolidation. Let's get another line in here off of this. Oh, look at that. Yeah, it comes right off of this, doesn't it? Okay. Yeah, so here we are with a consolidation with a couple of little bit of resistance zones here. We've come into the first resistance on this consolidation. I mean, we do seem to be stepping up a little bit. We did basically technically make a higher high, almost broke out of this consolidation. Why don't we zoom into this? Because, I mean, you know, the downtrend is definitely broken. You know, our stage 4 decline has now looked like it's turned into stage 1 accumulation. And so when do we go to stage 2 markup? Is this the beginning of stage 2 markup here? Possibly. I want to zoom in a little closer on all of this because, you know, this area is really starting from back here, I would say. You know, this is the really big base here. This is our accumulation zone, but is it stepping up? You know, we came in, we made a high, and then we came back down. You know, we made some lows here, nice little double bottom here, big gap up on earnings, and you know, continue higher, but now it's kind of made a bit of a double top, right? Ever so slightly higher high. Now, if this turns up and come, you know, break through this high here, well, then we've got a couple of higher lows, right? So that would be nice to see. And then we could start thinking about, yeah, maybe we're going to move into a stage 2, markup kind of pattern where this continues much higher for a while. So, you know, if you're looking to add to this, accumulate this, I mean, this looks like an okay place to do it. We've got a bunch of moving averages underneath too that seem to kind of be acting as support. So, you know, maybe the bottom is in this. And you know, maybe we don't see any lower than this. This could be a good place to buy this, or we could revisit these lows here. You know, if the market misbehaves again. So that was HIMS. Boeing. We've been looking at this. You know, trying to get in this. Missed the good entry on this. From this cup and handle here. Well, there's been a couple entries on this, right? I mean, you had the cup and handle with a bull flag here. You know, you could have entered here, would have chopped you up a little bit, but you wouldn't have taken much heat, and it has eventually started, you know, moving higher, right? So really, that was the nice entry, was back here. Another good entry was the break out of this little pennant, except that it gapped up, and it gapped up a fair bit. So that was tough to take, and I didn't take that. Now, we are drawing a bull flag right now. It's a little messy. It's not super clean, but you know, these patterns in Boeing tend to not be super clean. So we just kind of got to deal with that, right? So here's your bull flag, and it's still a little early on it. You know, this bull flag could form for another number of days, but then again, we've got We've got that CPI tomorrow, and that could change everything, of course, right? That could make this breakout either the top or the bottom of the bull flag. All right. So, yeah, that bull flag is going to look something like that. So basically, I mean, if you're bullish on this stock, then you want to buy the breakout to the upside. I think there's lots of room to run. This target level here at 220 was from this bull flag, and this target level here at 265 was for the cup and handle. And we'll just back up so you get context on the whole thing. You can see that, you know, through breaking out of this couple handle and everything, that we have now, you know, broken this downtrend off of this nice bottoming pattern here. So, yeah, I like Boeing. I'm just having a hard time finding a place where I'm happy getting in, unfortunately. So I think, you know, you may just need to bite the bullet and just get in. All right, so that was everything for Jerry. For Casey Dodds, wanted to look at VSAT. It's information technology and communications equipment. I have no idea. Maybe they're a satellite company. Never heard of this one. Actually, here, let's take a look. Let's see. Go. All right. Let's see what Stock and Lock has to say. VSAT provides communications technologies and services. The company is headquartered in Carlsbad, California. Currently employs 7,000 full-time employees. Wow. The firm operates through 3 segments: satellite services. Okay, so we figured that. Commercial networks and government systems. The satellite services segment provides satellite-based broadband and related. I'm not going to read all the rest of that. If you're interested in this, you can go ahead and read that some of yourself. So yeah, it's satellite services and communication. This is messy. Okay, I'm going to change this to a weekly for a second. Get some lines on here. So, longer term uptrend, but that has been rolling over really since the middle of 2019. So why did this uptrend fail? I'll show you that uptrend. Yeah, something like that. Actually, you know what? Let's bring this back to here. Yeah, I think that works quite a bit better. Okay. Yeah, so here's your, your multi-decade, 20+ year or 20-year uptrend that failed in the middle of 2019. Why? Why is that? And failed quite well. Okay, it failed quite hard for COVID, but you can see it was already rolling over before COVID. And it's been pretty much in a downtrend since then. Although it keeps trying to put in a bottom, but it's still making lower highs, even though it's no longer making lower lows. Okay, let's go back to the daily. It's a bit of a messy chart too. Like levels, it's not behaving well off of levels. I mean, it kind of is, but all right, let's get that one in. Here, that's what it's looking for. There we go. Yeah, I've got a fairly major lever here. It's kind of always. It broke down through there. You see here, it broke down through, came back, retested, retested again. Took a little bit of time to get through. So this is a really important level. You can see when it went through back in September of last year. Was only through it for a few hours before it bounced up again. Same goes over here in November. Didn't even break through it here. So yeah, this 29, really important level. It kind of looks like somebody is holding it up now at 29. So maybe the bottom is in this, but you've still got, like many stocks, you've still got a downtrend to contend with. Let's put the intermediate trend on this. We could start here, do something like that. And so that downtrend line is still overhead. However, it has managed to get up and through all its moving averages recently. Most of them are still declining. Obviously, the 200 is still declining, but it's good to see it's above its 200-day moving average. Nice move off the bottoms here. So from 30 up to, where would you come to? About 37. That's a good move. So not surprising to see this consolidate in here. Not really making a bull flag yet. Can't call this a bull flag yet. If this matures a little more, puts a little bit of a base in here, or puts a little bit of a flag onto this, maybe something like that, for a week or so, I probably be interested in buying that breakout. Gotta watch out for this level here. Let's get that one drawn in too. Minor resistance level, but it is definitely there. what is that, 41, 42, could be an issue as well as this downtrend line. But yeah, it looks like this has done a pretty decent job of putting a bottom in. It's just so choppy, though. I mean, it's up and down a lot. You know, from 29 to 42, back and forth, a couple of round trips in that range. That's fairly big moves. So yeah, probably kind of a scary stock to be in unless you get a really good entry on it. You know, down and around this area. So hopefully that's helpful. If you need any more info on that or have any more questions, Casey, just hit me up in the Discord. Okay, that is it for people who message me with tickers. I see Marvin has arrived. Hello, Marvin.
Hey, Happy New Year.
Happy New Year to you. Justin has been waiting patiently, so we'll get to his next if he's got.
Oh yeah. Go right ahead. I'm here today to sit and be a sponge. So I don't have anything.
Okay, so hey Justin, if you've got any tickers you want to look at.
Yeah, sweet. Thanks, Kevin. Also, what's up, Marvin? How you doing?
Hey, how's it going? Happy New Year to you too, Justin.
Thanks, man. So, I have something a little bit different from what I'm like usually used to. I wanted to try something new.
Sure.
And I realized, you know, it's not. You mentioned before it's not really your expertise, but I jumped into some penny stocks.
Okay.
On the OTC market.
Oh wow. Okay.
Yeah. I was just, you know, it's mostly just out of curiosity. Like the amount of money I put in there is not like, you know, an amount I can afford to lose.
Yeah.
You know, but I just kind of wanted to see what your thoughts were. I guess there's a couple of them. I'm trying to figure out which one to show you first. Let me see. All right. The ticker is CRTD.
CRTE as in echo?
D as in dog.
Oh, D. And it's only 4 letters?
Yeah.
Okay.
That's it.
We need some Jeopardy music here while we're waiting for this to
load. Yeah,
Yeah,
and I even noticed that like on TradingView, it's like everything is delayed by 15 minutes, all the data.
Oh, okay.
Yeah, but what I ended up doing is I paid for the, you know, I think it's like $350.
Yeah.
To get it real time.
Okay, so.
Yeah, what caught my attention with this? It's, you know, it had that big move up, and then
this move here, yeah,
and then it kind of you know, what looks like a consolidation, and you know, if you look at it at the 30-minute chart, I'm not really good with like wedges or anything, but I think it kind of like wedge-ish type action is what I saw. And I ended up,
yeah, a little bit. I'm mostly seeing sort of horizontal in here, although it is tightening. And, you know, there is a little bit of, you know, there's definitely a little bit of tightening in here.
Yeah.
Also, like really seeing in the last, well, I mean, I guess this is the last 2 or 3 days. Look how tight it's gotten. So, I mean, look at the normal behavior of this thing on a 30-minute chart, all over the place, right? Look how tight it's gotten in the last few days. So why is that? You often see this sort of thing happen when there's like a takeover or something and they're being bought for cash.
Okay.
Normally you'd see a really big move up because they'd be being bought for more than 80 cents probably. If they've been trading at 80 cents, then you know, obviously they're not going to take a deal to be bought for 80 cents. You know, they'd probably be, you know, for this company, I bet you they'd be, if they were getting taken over, it'd probably be $1.50 or something like that.
So I'm looking here on TradingView right now. The news on it is Global Tech Industries Group Inc. bids $100 million in stock for acquisition of this company.
So there it's a takeover, okay, but it's not a cash deal; it's a stock deal. So if we go look at this other company, so is this other company public? It must be public if they're bidding stock.
Yeah, yes, yeah. I mean, the thing is, you know, I don't know much about the company. I got interested strictly on the technicals.
Right.
I can even and I ended up getting in at I'll tell you the exact day, January or Friday the 6th is when I got it.
Right.
Which is kind of risky. I know it's a Friday.
Yeah.
Yeah, but I was like,
And then this must be the following. Yeah, that must be the following Monday. Yeah. Okay. Cool.
like right before, kind of like that.
Nice.
Move up.
Okay. Good. So you got some of this move up. Are you still in this?
Yeah.
Okay. So this is probably turning into a merger arb play. Like it might go sideways like this for quite some time now.
Okay.
You have to do some research on this deal.
Yeah.
And what's probably if they're wanting to buy this company with shares of their own company, what's going to happen is that this stock will then, until the deal closes, this stock will go up and down like the other company, like the acquirer, right?
Mm.
So, what do you know the ticker on that other company?
Let me look it up real quick. The ticker. I don't know what Global Tech Industries Group is, so I can look it up.
Let's see if I can look it up. Whoops, that's not what I wanted to do. I will.
All right, so the ticker I'm finding. Wait.
GTII.
Yeah.
Yeah. See, look. See how the price action on this one has tightened right up as well.
Yeah.
We're still looking at a 30-minute chart here. So the two stocks are now kind of like acting like each other. And that's what you'll probably see going forward. And this GTII should lead the way. And then the other one, the your one, CRTD, will follow. So yeah, I mean, for me, once a deal, something like this happens, I don't really want to play in there anymore because it's more because now it's operating more on fundamentals rather than technicals. You've got a lot of risk. Maybe this company, the acquiree, says, "Oh, we're not interested," or "You got to pay us more." On the flip side of that, something else could happen. Somebody else could come and bid for the company and bid more, right? Because that sometimes happens. You get a little bit of a bidding war going, and this could shoot up from here. So you just kind of got to be aware of the risks.
Okay.
Your risks are it goes sideways for months and does nothing, or it makes a big move in either direction. I guess, which is sort of almost like any stock, but it's the moves in this now could be a lot more sudden than in most stocks. It could be you wake up one day and this thing is like 40 cents, or it's $1.50.
Got it. Okay. Well, right now I'm sitting on like a 4% gain. I made like an okay, a decent amount of money. So yeah, now I'm kind of just in that like deciding what to do next, especially with tomorrow coming up. I don't know if like how much OTC stocks are affected by big data and Jay Powell talking and things like that.
So, well, these are both really small companies. So Global Tech, the acquirer, has 2 full-time employees.
Nice. They're on a Zoom call just like this right now.
They are, yeah. Green Tech. I mean, this doesn't really. I can't find much information on this. So when with these penny stocks, I mean, I don't know. I don't think they're affected much by things like CPI and whatnot, right? And the overall market. They're really, and especially now with an acquisition going on, I think that's the major driver for these at the moment.
Okay.
Yeah, I wouldn't. And I mean, you're trapped in this anyway now, through CPI, right? Because CPI is
Right.
tomorrow. You wouldn't be able to get out anyway. But yeah, I mean, here's this is the daily chart of the acquirer. Yeah, I don't know. If it were me, I mean, like I don't want to give you advice, and I don't really want to color what you think you should do, but I tend to get out immediately upon the announcement of these things.
Got it.
When they shoot up, they sort of shoot up, and then it's like, okay, I'm out.
Yeah, I mean, I feel like that's kind of like the attitude that I would have, in general, when I was like deciding to mess around in the OTC market. I can't imagine holding it for more than I'm already holding it a lot longer than I had planned to. Is what I'm trying to say.
Yeah. And a lot of the time, what happens in the OTC market is that they'll promote their stocks and get them, make the stocks run up. Let's see if this has ever happened with this company. Like here, who knows what happened here? Maybe this was rumors of a takeover in here, or maybe this is some sort of promotion. And what you see is like it will run up really nicely for a number of days, and then I mean it goes up a whole bunch, and then they do a secondary offering. They try and raise some cash, and then you get this big down move. I'm not saying that's what happened here, but it is this sort of thing. Although usually it happens a lot sooner, right? It'll go up like this, and it'll come right back down suddenly because they've done a lot of dilution. And that's fairly typical in these really small stocks. So you've got to watch out for that. So you got to be really careful about kind of overstaying your welcome in these things.
Yeah, actually, it's funny you bring that up because I did get owned this week. I mean, I'm out now, but I got owned pretty good. I was up like it was crazy. It's just like again, small amount. I'm just kind of like want to just experience I just want a little bit of experience in it. But I was up like 40% in 2 days.
Oh wow!
And then yesterday I got wiped out, and I was like, oh well, basically back to where I bought it. And yeah.
So I mean, it looks like you're pretty good at finding these things and getting good entries, getting entries in them, as they're going up or just before they go up. Why not go a little bigger, but take some off? Just peel bits off. So if you go a little bigger, then when you take some profit out, it feels like you're taking some profit out, right? If you're really small and you take some profit out, or when you're really small, you're like, oh, well, why should I bother taking any profit? It's such a trivial amount of money. And then you just let it go, and then you get boned, like you said, right?
Right. I was actually going to save it for the roundtable, but I ended up like trying to figure out where to add a little bit more.
Okay.
I was like, oh, should I add a little bit more? And then I totally added right before she came down.
Okay.
And then I was in the green like 40%, but up nothing. And then it ended up being down like 35%, something crazy like that. With a larger amount, but still manageable. I think this whole is like less than 2% of my entire portfolio, but still, I was just like, wow. And and it's just like so quick. Like you really have to kind of be watching it. And another thing I'm like a little bit not too really sure about is like liquidity, because I'm watching the level 2 on this, and there's like 4 orders sometimes, and sometimes like even if it's really high up there, I tried getting rid of some shares and it wouldn't sell right away.
Well, a lot of the time what happens with these things is you're at the mercy of a market maker. And the market makers in the OTC are brutal. This is why it's the OTC why market makers have a bad reputation. Market makers on the New York or the NASDAQ or something like that. I mean, they're fine, compared to these guys. These guys in the over counter, they'll take you for everything you got. This thing. So this thing does. You can see the average volume here. Like you can't actually see any volume because of these occasional spike ups, but you can see the average volume here is 1.1 million shares. So that's not much.
Yeah.
On an $80 or sorry, an 80-cent stock, right? You know, it's trading less than $1 million a day.
Yeah. Yeah.
You know, so that's not a lot. I could see why you would have liquidity problems with that.
Yeah.
So one of the things that is good to do if you are trading these small caps or these micro caps, I should say. I mean, look at the market cap of this thing. You know, 2.66 million, right? And what's cool though is these numbers are weird. 3.32 shares outstanding, but it says the float is 27 million. That doesn't make any sense. Anyway, it's important, I think, that if you're going to play these, that you're seeing a big spike in volume. That it's really in play, right? That other traders are in there, and you'll see the volume come up. And I'm not sure if we're seeing that on this.
And how would you tell? Because you know, I understand the concept of you know, finding stocks that are in play. What other things other than volume are things you could look at to see if like a stock is in play or not?
Well, like you know, a big move, right? Here, why don't I bring up? Give me a sec here. I'll bring up my scanner on Benzinga.
Yeah, that's a good question, Justin.
Go for it.
No, I said that was a good question.
Oh yeah. Because you know, you always hear that you know, stocks in play, and then you know, I know SMB Capital is like a popular firm. They always like on their Instagram post stocks that are on play on their store every morning too. But I'm like, sometimes I'm not really quite sure how they pick them. You know,
right?
Yeah. So, here we go. So this is like my kind of morning scanner, right? This is just for, all I got here is like on the one side, stocks that are gapping up, and on the other side, the stocks that are gapping down, and you know, sorted by like biggest loser. So we can, you know, this is a really easy way to look and see what's in play. If it's gapping up like 18%, you know, it's probably in play. And then what is the volume? So we'll take a look at that. PROK. And of course, you know, obviously this is something I do more in the morning than you know, than at this time of day. I do different kind of scanning at this time of day. So yeah, this is a weird stock, but you can see. So it had a big, you know, this is a really big gap up. And you can see it did have good volume, and it probably had good volume in the morning. And you know, you'd be able to tell that it was doing decent volume in the morning. I mean, if you went to the intraday chart on this, you'll probably see. In fact, why don't we go to the intraday chart on this? Let's go to a 5-minute. Okay, actually, that did not do any volume in the pre-market. Wow, this thing hardly has done any volume at all. All right, oops. Oh, where are we here? Hang on, this is all messed up. Here we go. Yeah, okay, this makes more sense. Okay, so you can see that this did, like normally this does nothing after hours, right? See, here's all our after hours. And then yesterday after hours, something was going on. And you can see that there's a little bit of volume in the after hours. And then in the pre-market, there was a lot going on in the pre-market, right? It really gapped up in the pre-market and it came back down. And you can see a lot more volume. So more volume in the pre-market this morning than during the regular trading hours the day before, right?
Yeah.
So that's the sort of thing. If you run the scan, you see that it's, you know, it's gapping up huge. You look, you see, okay, yeah, it's got volume, so this is in play. So that is one way to look, you know, for the kind of these things that are in play. It's just by how much is it moving in the pre-market. What is it gapping? And for me, this is the easiest way. You know, you want to find these things that are gapping up a bunch or gapping down a bunch. But you also want to make sure that they have volume. Like here's one here, this ERAS. it only did 5.1 thousand shares, right?
Yeah.
I thought I had a filter on this to. I thought I filtered out all of these. I used to have a volume filter on this. I guess it changed. It went away. Interesting. Okay, so yeah, so that's one way. Another way. So there's another tool that I use, and I use this mostly after the market has opened. But you should be able to use this during for the opening too. It's called Trading Terminal. So tradingterminal.com. This is free. I mean, they do have some services that you can pay for, but this part of this, everything we're looking on this page is free, right? And you can see it has, gappers, gapping up, gapping down. And it tells you, what is the daily volume. And I wish it had the average daily volume in here. So you could compare it, right? But what's nice here is it tells you the daily average true range, which is kind of cool, which is handy to know, when you're looking for gappers. And, then we've got, it's got lots of other stuff. And, you just look through all of this, especially, early in the day, look for your volume breakouts. So these are breaking out with lots of volume. I'm not sure how they define a turbo breakout, but you got high volume trending stocks, you've got your reversals, you've got your VWAP breakouts. So there's lots of things that can be really interesting, and you can come up with some really interesting stuff when you start just clicking on these names. And you will definitely find stocks that are in play that are doing, greater than average volume.
I see ENPH is in there.
Yeah. Right near the top of this list. So, and it's neat, so you go from, when you click on the ticker in that simulator, you get a, you get a bit of a chart, you get some, brings up some stats on it and everything. And your short float and all of that. So yeah, I kind of like this. This is pretty cool. And it even shows you, people in the House of Reps who have been buying or selling this thing. And insider trading. You can see here, insiders have been selling this quite a bit. So, yeah, so that is the scanner at Trading Terminal. Another good way to to look for stocks that are in play.
Cool, thank you. Yeah, I'll definitely check that out.
Yeah, you're welcome.
I also started using a TradeVue too, for journaling.
Oh, cool.
I didn't realize it was free. The whole reason I never used it is because but I looked on there. I was like, oh shoot, it's actually free.
Yeah, it's free up to like
30 trades a month.
30 trades a month. Okay, so that's not bad.
Yeah, and I'm definitely not trading 30 trades a month.
Right. And if you start getting near that limit, then maybe you just pick some of the ones that have more valuable lessons and you just journal those. And if something didn't have a valuable lesson, then you don't bother journaling that one, right?
That's true.
All right.
Yeah. I don't think I have anything else. I am in Meta. I was able to get into Meta.
Oh, cool.
Yeah. Actually, I got in before you brought it up on the
right
on the weekend thing. I was like, oh shoot, there you go. Yeah. The only other stock that I jumped into is a cat.
Oh, okay. All-time highs.
Yeah.
Gotta like these stocks that are making all-time highs. We're starting to see more and more stocks that are making all-time highs. We're starting to see more and more stocks where they're breaking out and it's holding, which is really, really nice to see. It like a lot of our, for instance, Apple looks like death, right? And this is the reason that the indices look like death. It's stocks like Apple and Tesla. These are holding the indices down. But there's plenty of stocks out there that look like CAT. And we just got to go find them. And as long as these breakouts are still working. I've seen a lot of these kind of breakouts, and I've been really gun shy trying, to take them. For instance, Boeing today. I didn't want to jump in on that gap. Or not Boeing. No, Home Depot. Was watching this, had an alert set up here, and like it gapped, right to my buy point, and I'm like, do I really want to take this right now? It's because I have been punished over the last year buying gap ups, right? Buying gap ups that are breakouts has been very punishing. So it's a little scary to do it. And I thought with this one, it's like, okay, no, I'm not going to do it. And I was also at the same time at the open, I was playing AMC. And AMC was making a really nice move at the open and really required a lot of attention. So it's sort of like, nah, I'll just leave that one for now. But if we look at this intraday, what I was kind of hoping for was a pullback like this, and then a decent setup. And then that decent setup really came when it broke out here from this consolidation, right? But by this time, this is 1 o'clock in the afternoon, and by here, I'm thinking, well, it's 1 o'clock in the afternoon. How much is this going to move into the close? And do I want to hold this new position into CPI when it's only got a little bit of profit in it? And so just decided against it. It's like, no, I don't want to take a new position on right now. If I had bought it here, and which I should have, right? I mean, that's where I had intended to buy it, but I didn't, because of the breakout, like I said. But this is really where I should have been in right here. I would have had some nice profit. I would have taken a little bit off, probably, if not in here, towards coming into the end of the day, because of CPI. But I would have been holding on to this. But I would have had a much, much better entry here, than here. Make sense?
Yeah. Is there anything, I guess, I don't know, like what I've noticed, I think one of the reasons why I've kind of been like just sitting back learning, because I got kind of burned on a couple of stuff. I'm like, all right, let me go back to the drawing board and make sure I and recalibrate. But I feel like there's something, I guess, like, I don't know, I feel like the entry for intraday or even just entering period, I don't know, something about that 10 o'clock hour where like things just do like a reverse. And, and it's like within that 10, around like 10 to 11 or so, it's like if it's bullish, then it's like, if it's going to be bullish for today, it's like that's like seemingly like the optimal time to jump in, it seems, or at least some of the plays that I've seen. And then you just kind of wait it out, and if it's going to make a big bearish move, around that 10 o'clock hour, it seems it creeps up and then just flattens. And I'm just curious. I mean, there's something I have noticed, and it's like, okay, I might need to maybe whatever entry I decide to do need to be around that reversal time.
Yeah, that's a really good observation, because there is very often reversals, between 10 and 10:30, right? Mm-hmm. And, it happened here. I mean, this is probably, about 10:15 or something? Mm-hmm. There we go, right? There's that candle there. That's the 10:20 candle. That was the top. Mm-hmm. Look at the day before. That big red candle, 9:50. Mm-hmm. 9:55. So yeah, I mean that is really common. These reversals at that time of day are really common, and so we want to look at the reaction to that, right? And that's one of the reasons that if you're playing this opening drive, you do want to be taking some profit up here, because when it's had a nice big extended move like this, I mean, this may not seem like, this is a high price stock. But from 322 where it opened, and it topped out at 329. I mean, that's only $7 on a $300 stock. But that's a fairly decent move, for Home Depot, right? Because Home Depot's not that volatile. Mm-hmm. So you got to think, okay, that's a pretty decent move. Yeah, take some profit there. and then on this turn, then you can hopefully still hang in with some of the rest, right? And then add to it later. But that is a really good observation because it happens a lot.
I was gonna to add to that, Marvin. So I told you, I mentioned that I started using TradeVue, right?
Mhm.
And it'll tell you at what times of the day you have the most loss. And my biggest losses are at 10 o'clock. It shows on my graph, and I was
Oh wow!
when you brought that up, I was like, oh damn, okay, I'm not the only one.
I'm gonna have to get with you so I can do the because I use TradingView, but I didn't know about the journal piece. I like typically just use it because I like the charts a lot better.
Oh, not it's TradeVue.
TradingView. Oh, okay,
Not
gotcha.
TradeVue. Yeah. It's a separate
TraderVue, and it's spelled VUE.
Yeah.
Okay. I'll definitely take a look into that, especially if it's free. Like I would love to do that just so I can improve. Because that would be great.
There you go.
I appreciate it. Thank y'all.
Yeah, here it is. Here.
And you could cut and paste like all your trades from your broker, and it'll automatically just plug it all in, which is pretty cool.
Yeah, you can just you can go import and like I use interactive brokers, right? So I go over there, I get a little report, I just cut and paste it, and or like I copy the data from there. It's got really simple instructions, right? This takes this really only takes about 10 seconds to actually do. Takes a lot longer to read it than do it. And boom, and you put your data in, and it sorts it all out into trades and everything, and yeah, it's really cool. And it's where it's where I actually started doing. You can see here.
Oh yeah, see
briefing, right?
Yeah.
So I used to do the morning briefing morphed from my journaling and preparation that I was doing in TraderVue.
Gotcha.
And then because I was doing a lot of that work anyway, and I was writing a little bit of commentary for myself and all of that, having these notes, and then I made it a little, put a little bit more effort into it to turn it into the morning briefing that we do every day now for you guys. But yeah, it started here in the journaling, because you can do this daily journal, and you can have a template for it. You can set up a template, and that's what I've done for our morning briefing. And you can do the same thing for trades. You can have a template for your trades. So you can make this template with information that you want to put in about your trade, right? Yeah.
No, I appreciate that. That's good. Yeah,
TraderVue.com.
Yeah, I got that pull up. I'm going to go ahead and create a free account for sure with that.
This, because I really think journaling is important. And then the cool thing is that you can get lots of reports and things, and like Justin said, he sees that he doesn't do well at a particular time of day. And one of the other things you really want to do is get your tagging. Get your tagging. You can see you got tags here. So you got your symbol here, and then put a tag in here. So you could call it like breakout or breaking news or something like that. And really, try and get specific with what kind of trade it is. And then you can go back and you can look at all of those kinds of trades and see. Maybe you're a good breakout player. Maybe you suck at breakouts or something like that. Or, but you don't really know. And I think when you're trying to if you're not journaling and tracking this stuff, I think you can really fool yourself. I think, we all have our biases, right? And human beings, I think, are really good at fooling themselves. But when you've got hard data that this puts together for you after you've done a number of trades, right? You've got hard data, and you can look at it and go, okay, yeah, I guess breakout trade isn't for me.
Yeah, no, that's helpful. I'll definitely do that because things right now, like I did take one trade at the beginning of the year. Well, I mean, last week was LYFT. Because I had been looking at that for a while, and it finally had a nice little run. And so I, got in and got out. But but I feel like I may have gotten out too early.
Yeah, maybe.
But I was like, listen, I'm just, let me just recalibrate and but I did get in. I feel like I got in at a really good entry point, like right around $11 or something like that.
Oh, yeah, nice.
Yeah. So
11, yeah, somewhere in around here, maybe.
mm-hmm. Yep.
Perfect. Look at. I mean, I don't blame you for getting out early. Mm-hmm. We have been rewarded for a long time now to get out early. I mean,
right.
look at this thing, right? I mean, this thing kind of has an average move, and it has now done double its average move.
Right.
If we, well, I mean, look at, if you look at that move, so you compare that to what it's done here, right? So yeah, it's gone, there's an average move. There, that's a bigger move. Okay, so I mean, it has done some bigger moves in the past, but a lot of these moves have looked like that.
Right.
So don't blame you one bit for being a little gun shy and wanting to get out early. But again, this is another thing that I've been seeing is how some of these moves now are getting extended, moving a little bit more than we would expect.
Right.
And yeah, this, I wonder when the last time we looked at this was. I don't remember looking at LYFT.
No, I think oh yeah, you did this like last time I brought it up. I can't remember. I know it was like was it beginning of December maybe?
Must have been the beginning or the middle of December, because I think this is the first ticker talk we've done since, because I had the Rona and everything.
Right.
We haven't done one since I think around December 13th. It's been almost a month.
Yeah.
And we had something else. We did something else. I think we did an educational session in there. Anyway, yeah, this is a nice looking wedge here, and it broke out the top of it like it's supposed to. So it's looking good. I mean, this looks like it will probably run a little more. It might stall out here at 15. In fact, it would probably be really cool if it drew a base here at just under 15.
Yeah, got you. And then try to start move attack that gap.
More, right? I mean, this looks like a good place for it to draw a base. A little bit of resistance there. It's already, it's had a nice move. That would be quite healthy. Gotcha. So keep an eye on it. Don't take that off your radar.
I got you.
Because there might be more in that.
Will do.
Was there anything else you wanted to look at?
No, the only other thing that like I said, I feel like I've just been kind of going to the drawing board and like really like practicing. Really just been trying to like practice like charting and like really just looking at different charts. So like I've been looking at Procter Gamble because like even in the midst of all of recession talk, I don't know. I got kind of interested because I think on the day chart it looks like it's forming a bullish rectangle a bit. And so,
interesting.
But and trying to go back to the highs, and and especially as we continue to talk about things of all things, economic recessions and people and uncertainty. I think one thing's for certain, people still gotta wash their clothes. So I mean,
yeah.
I think in terms of consumer staples. So just. It came up, and while I was just looking at looking in the consumer staples area, and that was, I was like, oh well, look at what it's starting to do, and could it go back to try to get back up to those highs again and go through? So
maybe, yeah. Like this move here was 27% since October. That's a big move for this stock.
Yeah.
So it's not surprising that it's consolidating here, and it could certainly break out of here and move to the highs. So you've got a little bit of resistance, minor resistance, right in around here, and then obviously we're going to make that a major resistance right there. I mean, look how many times it's failed here.
Yeah.
1, 2, 3, 4, 5, So yeah, that 165 level, that's going to be tough.
Yeah.
160. So I mean, is it? I guess I mean, this might be good because it's it's a bit of a slower mover. It's definitely a little, it's definitely quite well behaved, for sure, right? I mean, look how clean this is in this range. So yeah, this is the one where this is the kind of one where I don't normally do this, but I might be interested in like buying down here on this because you could buy down here and then just put a stop like right there, 50 cents away. Because I think that if it breaks out the bottom of this, it's going to move. Because that's kind of what this stock does, right? It makes these little consolidations and it breaks out and it goes. So if you're wrong, you're not very wrong.
Got you.
Which is always nice, right?
Yeah.
We can really define our risk, and if we do stop out, then stopping out was the right thing to do. And this looks like the kind of stock that would be like that. And the flip side of that is that you get a really good entry for playing the breakout of this. And you could, I mean, if you did enter here, you could just sell a little bit here and then buy back if it does get to there kind of thing, right?
Right. No, that's helpful for sure.
Cool.
So I appreciate this. This has been helpful. I appreciate you, Kevin and Justin. Thank you, because I definitely will be messing around in TraderVue for sure and fine tuning.
Nice. Yeah, I'd say it is eye opening. I'm like, oh shoot, okay.
Yeah. That's been my goal, is to fine tune, at least for this, like, first month or so, just like really practice.
Yeah.
And fine tune and then get back in. Kind of like figure out some tweaks. Because I think I realized the other thing is like I see stuff, or I feel like I see stuff, and then sometimes like I'm not reading that right, and then it does exactly what I map out, and I'm like, bah humbug. So
Right.
so but it's I think for me is I feel like if I continue to just do the repetition on terms of the charting, even while there's so much uncertainty, at least get a chance to still see and recognize certain patterns and things. I think would be helpful to assure, really, just merely for my own assurement, like to assure myself rather.
Yeah.
I agree. It's like you said, just repetition. I think
Mm-hmm.
I feel like I'm not like 100% there either, but I'm at least done it enough times where I could kind of like talk about it.
Right. Exactly.
I think that's what the goal is. Yeah.
That is, it is just repetition and doing it over and over. And, I don't know. I mean, maybe, if there's a rainy weekend or whatever, and you're just sitting at home, just blast through charts. Go through every chart in the S&P 500.
Yeah.
You'd be surprised how quickly you can get through 500 charts. So, just start going through charts and draw some lines here and there, and you see a little base like that, highlight the base, right? Highlight this uptrend. Just draw a few lines. And if there's nothing going on in the chart, then just skip it, move to the next one. But I mean, if you do that in TradingVue, if you put a watch list together, of say I mean, not necessarily the S&P 500. You'd probably want to have some better stocks or whatever, but get a decent sized watch list together, and maybe with a bunch of sector ETFs and everything as well, and just start blasting through them and drawing lines. And if you can, I mean, try and update it every weekend.
I'll do that.
And I think to add to that, Kevin, I think like in the beginning, you have to kind of allow yourself to like mark up a chart really poorly, because in the beginning, it's like I didn't really know what I was doing, but I was charting. I was just drawing lines that I thought were, that I thought were good, and then over time, I allowed myself to just chart up shit really, excuse the language, pretty badly sometimes, and then over time you will see it. I think I started to see, like, I didn't quite get resistance levels quite right, or trends quite right, things like that.
No, yeah, that's for sure. And I will say, like, because I do have, and I will say thanks to you, Kevin, for sure in the group in terms of like I do have on TradingVue a watch list of the market sectors.
Right.
So I do have a list of that, and I do have a list of like tickers that we may have mentioned or we've looked at, and I do keep them on the list as well. So I have like 2 separate lists.
Oh, cool.
So, but it's definitely, you're right. Like in terms of just coming up with in addition to journaling, making that part of like I guess weekly strategy or weekly like like you said, whether it's like sitting down on a Sunday or as I watch the video on YouTube, like just sitting there, let me mark through some things and see, and then and go from there.
Yeah, and you'll see your skills come together really quick because, like Justin said, right? I mean, allow yourself to make mistakes, but you will over time just sort of self-correct. You will just get better and better at it. Your eye will just see things easier. That's the only way to learn this, I think.
No, for sure.
Cool. All right. Well, I think on that we should start coming to a close here. So, all right. So next, what do we got going on? I'll do the market briefing on the weekend. I might not do it on Sunday. I might do it on Monday. We'll see. But U.S. markets are closed on Monday. It's MLK Day on Monday, right? Cool.
Right.
Cool. That never used to be like a real holiday. Isn't it a recent thing that's like a
not like well
federal holiday where everybody gets the day off?
I think at least as long as I've been at least 30 or 40 years.
Oh, okay. Maybe I'm thinking of another one.
Now I will say, like, I know, like, Juneteenth is a recent holiday. Like, is a recent holiday.
That's the one I'm thinking of. Mm-hmm. Right. That was recently made a federal holiday.
Cool. Made a federal holiday. Yeah. But people will be well, at least here in Atlanta, people will be at the MLK parade. It's like the annual, it's the annual.
Oh, really?
Yeah, there's a big parade in the city.
Oh, nice.
And this weekend, it's gonna be a little hectic because they have the parade, but then Sunday the president is speaking at Ebenezer on Sunday.
Oh, wow.
So yeah, I'm trying not to go downtown.
You've probably seen the parade plenty of times, right?
Yeah. I've seen the parade, been in the parade, and there's like a big annual like commemorative service on Monday.
Okay.
So yeah, it's a big deal, especially and particularly here in Atlanta. It's a really big deal, but and the Hawks play, so it's like all kind of stuff going on.
All right. Cool. Well, it's a good thing you got a day off on Monday.
Yeah, for sure.
All right. So we got that on the weekend. Nice long weekend coming up for us, and then a week from today we'll do a day trading roundtable. Although we sort of did that today, but we'll do more of that next week. And then the week after that'll be a ticker talk again. So hey, if you guys are watching the recording, thanks for coming out. And thanks you guys for being here live with us. Really enjoyed it, and looking forward to next week too. It's going to be a lot of fun next week, I think.